This week's market movements with Martin Smith from eNCA Capital. Martin, good evening. Thank you for joining us. It has been an interesting week, but let's start with today's big story. The troubled Tongaat unit has secured a strategic equity partner. What does this mean and what's your take on that?
Sure. So, from an equity perspective, Tongaat shares haven't traded on the JSE for a while now. So it doesn't make too much of a difference from that kind of value perspective. But I think it's more as a South African, if you look at Tongaat and the impact it has from a kind of KZN economy and just being a pillar of the sugar industry in South Africa, it's obviously very positive for them, shored up their balance sheet. So from that perspective, very, very positive.
Now, one of the biggest losers this week was ArcelorMittal, and their share price plummeted. Could you please tell us a bit more? I know they were blaming it on load shedding, and they're not the first and probably not the last.
Yeah, absolutely. So, they reported a headline loss at a share perspective, from a share perspective. So the market didn't like that. But I think the biggest thing is maybe a little bit of uncertainty or perhaps fears around the balance sheet of the business, which I think has led the share price quite a lot lower. Look, we've had a little bit of a bounce today, but there was a lot of selling pressure, not just this week after their update or their 6-month update, but also over the last few months as well. So interesting to see how that pans out, but for now, be sitting on the sidelines.
I see the rand also took a beating today after the Reserve Bank decided to hold on interest rates yesterday. They held it steady. Do you think the rand can claw back some of its losses?
I think so. The rand is obviously incredibly volatile, as we see all the time. We had quite a nice movement when we saw that US CPI number out last week. So we had some dollar weakness come through. So the rand kind of went below that 18 rands the dollar number. Again, when it comes to interest rates, we obviously had the pause midweek. So the carry trade there, where people are getting higher interest rates in South Africa versus balancing act of the South African consumer and GDP and the like, is kind of at play. But for now, I think we'll see a lot of volatility. But I think over time, we'll see a slightly stronger rand, perhaps led by a weaker dollar in the kind of weeks that follow.
Martin, retailers also announced an increase in sales, so the consumer is not that strained, or what is the case?
No, optically, you're right. I agree with you. So it looks like that when you look at the numbers, but I think if we kind of delve a little deeper, so you look at Mr. Price, for example, who had results today, it was mostly buoyed by acquisitions. Same with Truworths. You had quite a nice headline number, but it's actually largely because of their offshore component in the UK office. And their local numbers weren't as good, and kind of on a like-for-like basis wasn't a great kind of outcome, same as Mr. Price. So tells the same picture. Consumer is actually constrained. Makes sense if we look at GDP, higher interest rates, higher inflation, the like. But again, it's only when you delve a little bit deeper and you strip out acquisitions and offshore components of those two businesses.
And then lastly, Martin, the price of Brent crude ticked up above $80 a barrel today. What does this mean? I know we're still waiting for our fuel prices announcement. That will only happen late next week. But what do you think?
So, we've seen the oil price kind of be between 70 and 75. I think fears around global demand and recession, all of those things have kind of pushed it downwards over the last year or so. Kind of notable moves in the last kind of couple of weeks. You've seen cuts in production from Saudi Arabia as well as Russia. So that's obviously helping from a supply perspective push the price up. You've also had fears being slightly laid around demand side equation and perhaps fears of a global recession, specifically out of the States with the economic data that keeps coming out there. Kind of pushing the rhetoric of maybe higher oil prices. So I think we'll see it float between 75 and 85 until we see some kind of catalyst around global demand.
Thank you for your time tonight, Martin. That was Martin Smith from eNCA Capital. And that's all from my side.